Hello everyone, welcome back to my channel, The Tax Master UE. In today's video, we are going to learn how will we calculate taxable income for the purpose of corporate tax. So I have taken one example of a standalone financial statement which is provided in the guidelines as issued by the FTA. So without any delay, let's get it started. So you can see here, I have one standalone draft of a standalone financial statement. Here the company, before proceeding to calculate taxable income, will learn certain thing. We will go through the detail of the company. So you can see here the company F. Company F is incorporated and tax resident in the UAE, and it is in the healthcare industry. So incorporated on 1st January 2024 and prepare financial statement on accrual basis of accounting, and its tax period is Gregorian calendar year. It means 1st Jan to 31st December. Also, company F has a wholly owned subsidiary, company Q, which is a qualifying public benefit entity. So please keep this thing in the mind. It is company Q is a qualifying public benefit entities and exempt for corporate tax purposes. Another thing to uh, keep in mind is this Miss K. So Miss K is key senior personnel and also the managing director of the company Q. And company's CF employee record times, it shows that Miss K spends approximately 70% of her time working for the company's yes, and remaining 30% is for the Q. So here, since Miss K is allocating, Miss K is working for 70% of her time for company F. So the salary paid to Miss K should be allocated between these two companies, one company F and company Q. Here again it is saying that Miss K is employed by the company F and her entire salary cost is borne by the company F only. So whatever the salary she is getting from company F, this should be a portion between company F and the Q. Now let's go to the draft of standalone financial statement. You can see here revenue from the sales is 70 million, and expenditures are like cost of goods sold, salary, wages and bonus to employees, director and share cost. Here share employees cost means you can here the salary of Miss K, which is 2 million. So this should be a portion between company Q and company F. Now since we are calculating taxable income for the company F, will record the salary expenses to of Miss K accordingly. Now employees benefit expenses which working from the home, and local tax and property 500,000, and other purchases are software license and right to use for 1 year 900,000, low volume high volume medical equipment 700,000, and item purchased for subsidy. Look here, it has subsidy company Q. So company F has paid for the purchase for subsidiary which is of 700,000, and there is nothing mentioned about reimbursement. Since this is not the cost of company Q, this should be added back while calculating taxable income. And if there is any information regarding reimbursement, in that case, the unreimbursed amount will be added back only. So we'll go into all the detail if there is any information regarding reimbursement of these expenses. Now, employee travel expenses during office days and during non-office days, 50,000, 20,000. Now, entertainment expenses. Here, entertainment expenses employee, entertain business partner and family member. So keep in mind here, business partner and employee. We'll come to this provision later. Now, donation and gifts to qualifying public benefit, which is totally allowed. Other persons not allowed. So fines and penalty, speeding fines, employees, breach of contract, customer compensation, professional fee for defending law, and this. So all these are altogether 1.92 million. Now bribe to customers employed to enter a new contract, rent paid to shareholders office, irrecoverable VAT input, contribution to private fund, pre-incorporation expenses, provision for bad debt, provision for customer warranty, and provision for fines and penalties. Altogether, total expenditure is 5.724 million, and accounting income is equal to A minus total revenue minus total expenditure, which is 1.276 million. Here again, out of 3 million contribution to pension fund, AD 1 million remained unpaid during the year 2024. So here in the financial, it is total expenditure of 300,000 is shown here. Here you can see 300,000, but unpaid is 1 million. So this to be added back. I will come to this provision. I'll show you all these things one by one. So let's start how to calculate taxable income for company. Yeah. So you can say particular amount which is in AED, then adjustment, you can say adjustment. What are the adjustment, or you can say notes to account. Okay, notes, it will be more suited. Now first of all, we'll start from the accounting income. Total accounting income is 12.76 million. So accounting income, when you see accounting income, we can directly link this from here. 12, this one. Now add back it. What will we add one by one? Let's see which expenditure they have claimed to be deductible, which and this need to be, whether this need to be added back or not. So one by one from here. In expenditure part, you can see cost of goods sold. This is totally a business expenditure, so no need, this is deductible without any adjustment. So total of 23 million is allowed as deduction. So we will not add back, we will not do anything for this expenditure. Now for salary, wages and bonuses, you can see here to employees 10.5 million. This is totally allowed. To director who are shareholders, look here, 5 million. This is the salary paid to director who are directors. Here the shareholders are working as a director, so remuneration to the director. Since nothing is mentioned, no information we are assuming that this salary is reasonable, is as per arm's length price. So we will not do any adjustment for this salary, for the salary to the directors or the shareholders. Now share employee cost, you can see here for share employee cost, the salary of Miss K. So Miss K, since Miss K spend only 70% of her working time in the company, of only 70% will be allowed as deduction, other 30% will be disallowed. So we'll add back to the accounting income shared employee cost. How will you do this? 2 million multiplied by 30%. So this will be 600,000 will be allowed, should be added back to the accounting income. Now let's come to another point, that is employees benefits for homework. It means any employee who are working from home, since this is totally a business related expenses, so totally allowed. No, there requires no adjustment. Will not do anything to this. Local tax, property and municipal tax, so these taxes are paid by the company to the authority to running the operation, to for the operation of the business, to running the businesses. Since these are the business related expenses, will not do anything. Will there won't be any adjustment, any without any adjustment. This is totally allowable. So will not do anything. Now let's come to the purchase. Look, our software license 900,000. Since this is a business purposes, nothing will do nothing. Again, this medical equipment again will do nothing. Item purchased for subsidy. Look here, purchased for subsidy, and we went through all the detail of the draft standalone financial statement. There mentioned no information regarding reimbursement. So we are assuming that this 700,000 is the unreimbursed amount, and this should be added back. So we'll add back to accounting income. How much is 700,000? Now you can see two items already added back. Now again, let's come to employee travel expenses during or during working days or non-working days. Since these are employee related expenditure, employee travel, this is assumed to be the business expenses and totally allowable for the deduction under the corporate tax. So without any adjustment, this deduction is allowed. Now let's come to entertainment expenditure. So before going to discuss all these things, I would like you to take you to the provisions provided in the guidelines for calculation of for the provision related to allowable for entertainment expenditure. So when you come here, look, you can go to article 28 of the general guide rules. There you can see entertainment expenditure. So it is common for cost to be incurred to entertain customers, shareholders, supplier, or other business partner. Look here, business partners are also mentioned. So these in this type of entertainment expenditure provided to customer, either customers, shareholders, suppliers, or other business partners, these are only allowed up to 50%. And again, we'll see, you can see here the deductibility limit does not apply to expenditure incurred for the staff entertainment. Since if this type of expenditure, this entertainment expenditure are incurred for the staff or the employees of the company, the limitation does not apply. It means total expenditure are deductible unless the staff are the family member and event is private in nature, such as wedding. So we are assuming no information is provided to us. We are assuming these staffs are not the family member and the event is not a wedding, like private wedding. So the entertainment, from here we can conclude that the entertainment expenditure incurred for the employee are totally allowable, and entertainment expenditure incurred for shareholders, business partners, uh, customers, these are only allowed up to 50%. Now let's come here. Since entertainment expenditure employees related, so 900,000, it is totally allowed. Now entertainment expenditure related to business partners, look here. So this business partners expenditure is only allowed up to 50%. So we'll add back this uh, entertainment expenditure while calculating taxable income. Now you can see here entertainment expenditure related to business partner. Now we'll copy here. This will be, we can directly link 500,000. No, scroll to 500. This, where it is, this multiply by 50%, 50% is, so total will be 250. Now let's come to entertainment expenditure related to shareholders family member. Since this is not a business related expenditure, since this is not entertainment expenditure related to employee, these are totally disallowed. So we'll again add back this expenditure. here. How much? 200,000. Now, donations and gift. Qualifying public benefit entity, let's come again on this table, non-deductible expenditure. So what are the expenditure which will not be allowed as deductions? So here you can see at point number 4, donation, grant or gift made to an organization that is non-qualifying public benefit entity. In that case, it is not deductible. We cannot take deduction of such expenditure. So here, since it is public benefit entity, this is totally allowed. So 500,000 is totally allowed, and for other persons it is not allowed, totally disallowed. So 700,000 will add back to gift to another person, other person, gift to other person. How much? 700,000. So you can directly link here. Now let's come to another point. Fines and penalties and compensation. Speeding fines. Look, whenever we are talking about fines, deductibility, let's understand this. Any fines and penalty other than amount awarded as compensation for damage or breach of contract. So if the fines are related to compensation for damage or breach of contract, then this is non-deductible. Now come here at this at the draft. Speeding fines, breach of contract, customer compensation, professional for defending legal complaint. Look here, defending legal complaint means they are incurred to defend the company, defend the business. So this is business related, so it will be totally allowed. Now let's come to customers compensation. Now we'll talk about speeding fines employees. Look, this fines is imposed to the company on the employee for by the government by breach of government laws and regulations. So this is not by the virtue of damage or compensation, damage or breach. You can see here, payment of fines or penalties or other compensation for the damage or breach of contract is not deductible expenditure. So company F has paid 220,000 relating to speeding fines levied on the company's employee, which were incurred during the performance of the employee's work. Given the nature of expenditure, fines and penalty due to invitation, avoidance of laws, it is non-deductible. So these fines of 20,000 will not be allowed as deduction and will add back to the taxable income. Fines and penalties, fines and penalty for employee speeding. How much? 20,000. We can directly link from here. 20,000. Now another is breach of contract. Since it is breach of contract, you can see here compensation for damage or breach of contract other than means other will be not disallowed, the other will not allowed, but since it is in the nature of breach or damage of contract, it is allowed. So this 600,000 will be allowed as deduction. Other is customer compensation. Again 900,000 will be allowed as deduction, since this will be regarded as incurred for the day-to-day operation of the business. And professional people defending the legal claims by the customer. So I have already explained it earlier. So it is totally allowed. Now let's come to bribe to a customer's employee to enter a new contract. So when you see bribes, there is nothing mentioned. Bribe is totally whatever type of bribes, whether it is for companies or employees or whatever, it is totally disallowed. So we'll add back this bribe amount of 2 million here. Bribe to the contract to get a new contract. We'll back here. So total is 2 million. How much? 2 million. Now another point is office rent paid to shareholders for office spaces. So the office is in the name of the shareholders, and that office is used for the business purposes. So since this is a business expenditure and we are assuming that it is arm's length, the arm's length principle is complied. So this total 900,000 is totally a business expenditure and it will be allowed without any adjustment. Now irrecoverable input VAT, you can again come here. You can see here recoverable input VAT is disallowed. However, since it is irrecoverable VAT input, it is allowed as deduction. So we will not do any adjustment to this in irrecoverable VAT input. Now contribution to pension fund, look, 3 million. Here one point is out of 3 million, 1 million is remained unpaid. So when you see here contribution to pension fund, contribution made by employee to a pension fund in respect of its employee which is not paid in the tax period, look, which is not paid in the tax period, not deductible. It means unpaid amount will be added back to taxable accounting income to calculate taxable income, or are in excess of 15% of total employees remuneration in the relevant tax period. Since this 1 million unpaid and remaining 2 millions is less than 15% of, if you calculate all these 17 point, if you calculate all these um, 17.5 million multiplied by 15%, how much it comes? 2.62 million. 2.62 million. Since 2 million is less than this, it is totally allowed. It means only unpaid amount of 1 million. It means this 1 million will be added back to the accounting income. Unpaid portion of private fund. Portion of private fund. So how much? 3 million. 3 million minus 2 million. So altogether 1 million is added back. Now let's come to the point pre-incorporation expenses incurred by the shareholder. This is totally allowed, so it does not need any adjustment. Provision for bad debt, this is again totally allowed. It does not need any adjustment. Now provision for customers warranty, this is again think here. Bad debt, yeah, bad debt is totally, since it is a business expenditure, it is totally allowed. Now provision for customers warranty, so customers warranty, this is business expenditure and totally allowed for corporate tax, so we will not do any adjustment. Now let's come to provision for fines and penalties. So look, since the company is in healthcare industry, so healthcare industry, here it is the fines and penalties for pollution, like for manufacturing of industry or something, for pollution clearance or so, whatever, it is paid by the, it is paid to the government, local government. So since this is for the violation of government laws and regulations, this is not allowed as deduction. So we'll again add back this provision for fines and penalties to the taxable income. So how much? 1 million. 1 million. So when how much is total control of filter if you see, then total comes 600 million. So total taxable income comes to is equal to this plus this. So altogether 19.23 million. Now we'll calculate corporate tax liability. Calculation of corporate tax liability. So you can see uh, up to 83 million 375,000 it is zero, and apart from and next and remaining how much, this minus 375,000 altogether this, and this amount will be calculated at the rate of 9%. So total tax liability is this plus this. So total tax liability for the tax period 1st January 2024 to 31st December 2024 is total tax liability is 1.6995 million. Thank you so much for watching. Please please wait for my next video. We are going to explain another case study. We are going to learn computation of corporate tax liability from another case study. We'll upload in the next video. We'll learn in the next video. Thank you so much.